Recently, the Indian currency has been falling and is trading at its all-time lows. Now, you need to pay 80 rupees to buy one single dollar as the value of Indian rupee has dropped down drastically. Do you know why is this happening? Why the Indian rupee has become so weak against the US dollar? Let me help you to understand this. Welcome to Simple Logic. Here, we try to make the complex things easy and simple to understand. And today, we are going to discuss why the Indian rupee is falling so much. Before we go any further, first let me tell you what this rupee depreciation is all about. Rupee depreciation is nothing but the fall in the value of Indian rupee against the US dollar. It simply means that the rupee has become weaker against the dollar. Let me give you a very simple example on how it actually works. Suppose the value of one US dollar has increased from 50 rupees to 60 rupees, which means the rupee has depreciated. Now, you must be wondering who controls this movement? Who decides the price? Who is selling the currency? Who is buying it? And so on. In reality, there is no single entity or an individual who controls this move. There is a huge market out there in which the currencies of different countries are bought and sold every day by millions of buyers and sellers. Many do it during international travel, others do it for their business, few trade it online, some other for imports and exports and so on. It's a volatile market, and obviously, the currency pairs will move according to the demand and supply created by these buyers and sellers. At the time of creating this video, the Indian rupee is trading at its all-time lows, which is around 80 rupees against one US dollar. Now, let's have a look at what are the key factors which impact the price change. As the currencies always trade in pairs of two different countries, hence, the global factors will have the most impact on the price change. Also, the other important factors like the crude oil prices, the current ongoing Russian invasion on Ukraine, the global politics, inflation, stock markets, interest rates, fiscal deficit, have a strong impact on the rupee value. Ultimately, these all factors contribute to the overall demand and supply of rupee against the dollar. Now, I am sure that you must be wondering why there is such a huge fall in Indian rupee. This is mainly due to the outflow of the foreign money from India. One of the reasons of this outflow is the increase in interest rates. US has raised the interest rates, and now the cheap loans are not available anymore for foreign investors to invest in India. In fact, they are pulling out their existing investments and moving their dollars away from India, considering the global economic situation. In doing so, obviously, they are buying dollars while taking money out from India and selling rupee, which is putting pressure on Indian rupee, resulting into this fall. Along with this, the ongoing Russian invasion on Ukraine has kept the inflation on the rise. All these factors are hitting hard to the Indian rupee value and pulling it down. Now, you have an idea of why the Indian rupee is falling so much and the key factors triggering this fall. Mainly, the impact of crude oil price rise. As the oil prices keep on rising, we need to spend more dollars for the same quantity to keep our country running, which will increase the dollar demand and reduces rupee value. Secondly, the impact of interest rates. As long as the interest rates are not favorable for borrowers, they won't invest in India. This again will depreciate the Indian currency. And the very important factor, that is the difference in India's expenditure against the earning, which is nothing but the import and export. As the imports are way more than the exports, we end up paying more in dollars and earning less in rupee, which again pulls the rupee down further. Now, let's look at the impact of this fall on a common man's pocket. If the fall of Indian rupee does not stop here, then you may end up paying more for everything from transport to mobile phones, from food to all household expenses, from buying clothes to taking care of your health, as India is more dependent on the imports of oil and a lot of commodities. As the oil prices are going up, the transportation will be expensive, which obviously will make everything more expensive. And due to the rupee depreciation, you end up paying more for all the services, especially those which are provided by the foreign companies. All this will get expensive. The Reserve Bank of India plays an important role in this situation. It can take appropriate actions to control this fall. However, as the forex market is huge and volatile, RBI alone won't be able to balance it out completely. It requires more stabilized global political conditions, strong Indian financial policies, control on the fiscal deficit, increase in the GDP. Having said that, considering a strong government in India and a positive policy making to boost the Indian economy, you can expect to see a reversal in the rupee value soon. But at this moment, you can keep a track on what's actually happening in the money market and also plan your budget and savings accordingly. So, that's it in this video. I hope it added some value in your understanding of why rupee is falling so much. Thank you very much for watching this video. If you liked this video, then please subscribe to our channel for more such informative videos.